Hi, my name is Joshua Seal, and this is Hail Country Roofing.
Hello, this is Joshua Seal with Hail Country Roofing and Gutters. Today I want to make a quick video explaining how to read and understand your insurance paperwork and the big takeaways for you, the homeowner. You don't necessarily need to know all of the details, the estimate details for instance, every single line item. You don't really need to be familiar with all that stuff. Leave that up to your contractor, your insurance company, and you just kind of stick to the high level things. So let's go ahead and jump in. Your first and second page are just going to kind of be introduction. The first page, generally what I see, is a letter from the adjuster kind of explaining some of the important takeaways from your policy, exclusions and things like that. If there's things that they can't pay for, why they're not going to pay for it. If there's non-recoverable depreciation, it'll be explained in there as well. Just some things that kind of help you understand and cut down on phone calls. So your next page is going to be your cover sheet. Now this is going to have all your pertinent information. It'll have your information up here. It'll have your claim rep's information here, how to get a hold of them. It'll have your claim number. It'll have your policy number and your type of loss. The claim number is what you're really going to need to hold on to and make sure that you've got copies of this somewhere. Anytime that you communicate with the insurance company, you're going to need to have this ready to give to them. This is how they're going to reference everything related to that claim. If you send off documentation or you send an email off to your adjuster, make sure you put this in the subject line so they know exactly which claim to switch over to. Pretty important number right here. So anything related to your claim, this is going to be the thing to reference. Now, like I said, your estimate details, you can certainly dig into it. You can get it in every single line, but you just don't really need to. I'm going to go ahead and explain to you exactly what this is and how to read it and why they do it the way they do it. But again, your cost as the homeowner should be your deductible. If your contractor is running things the right way and knows how to work with the insurance properly, there shouldn't be any issues with him being able to do supplements and get whatever money he needs directly from them without any more than a deductible coming out of your pocket. Unless it's going to be policy exclusions, like I said. But those are all individual details, and this is sort of a general outline of insurance claims paperwork. So this first column is going to be your description. It's going to have just a general listing of what that line item is for and why it's in there. So let's go ahead and look at number one. This is remove and replace. So you see R&R, think remove and replace. 5/8 inch drywall, hang tape, float, and ready for paint. So basically drywall that is done, ready to be painted and textured. They're paying for 693.56 square feet. SF is square feet. They will always have the unit there in the quantity in column D. So they might have man hours, they might have an individual unit. So if it's something like a TV or a microwave or a dishwasher or something like that, a window mounted AC unit, they're just going to have one each, or if you have two TVs of about the same quality, they'll put two on there and they'll just include the unit cost. So now this is kind of the interesting part. To get your RCV, column F, right, you have to multiply column D, the quantity, by the unit price, column E, and then add the tax to get RCV. Okay, this is what they're saying they expect to replace the entire thing for. So if you're going to remove and replace all the 5/8 inch drywall in that location, that's the total cost to do that amount of work. Now, based on how old the material is, how long it's been in service, depreciation is going to vary quite a bit. So a roof is probably a really good example of that. A lot of people understand that terminology and the age and things like that. So we'll talk about a roof for a second. Now, let's say you have a 30-year shingle on your house, right? It's been 15 years. That's roughly half of the expected use of that roof. So they're going to keep 50% with them. They're going to give you 50% to get the work started. That's what depreciation is. It's mostly based on time in use and what they estimate the total longevity for that product is. That's kind of where they get that from. So now your ACV. This is basically what they're going to send you to complete the work. Okay, so once you've finished the work, you've got everything done, it's looking better, the crew is all cleaned up and they're off the property, your insurance contract or your contractor is going to send a bill off to the insurance company to close out the claim, and then they will send you this amount in the mail. So to get the work started, what they estimate it will cost to complete the work, what they're holding on to while the work is being performed. All right, so that's generally the basic breakdown for the line items and kind of how they work. It's pretty straightforward stuff. We're going to talk about this here in a second. You might have noticed that all of these have parentheses. This has alligator mouths on both sides. We're going to talk about that. So toward the end of your claim, you're going to find a page that says a summary for dwelling, or summary for external structures, or summary for something along those lines. Now, your line item total is just going to be this number, okay? But if you add the 181 for tax, you're going to get the RCV, right? Because you're always going to add the tax to the RCV, and that's going to get you this number. This first section is simply that. Okay, it's breaking up the line item total and the tax to get your replacement cost value. This is what they think it will actually cost to make it new again. Now, from here, we're going to start taking some things away from it. All right, we're going to less depreciation. So this is what they're holding on to at the insurance company until the work is completed. And that's going to leave you with the actual cash value, $3,955.05. Now, from there, before they send you the actual cash value, they're going to less deductible. So they're going to subtract your deductible out of it. Now, why do they do that? Because they want to make sure that you pay the deductible. When they take this out, they are not saying that they've already taken it out and you've got this money to complete the work. No. When they take this out, they're telling you, the homeowner, this is still the price that it costs to get the first half of the work done, not this down here. What they expect you to do is take $500 from your pocket and put it back into the claim, keeping it at $3,955.05. That is what they're saying here. They kept the $500 with them, you put the $500 back, okay? When they take it out of your claim, that is not you paying your deductible. You pay your deductible and you take money from your pocket and put it back into claim. This is something that I see come up over and over again with homeowners. So that's how that works. Now, this is a quick breakdown of your depreciation. So, total depreciation, this number right here from this column, right? That is what they are holding on to. But there is some stipulation, there is some fine print in your policy that says they only got to pay X amount for this. So it's a $750 TV. They're saying that they're going to keep something like 62 or 63% of it. So they're holding on to some percentage. By keeping this, they're saying because of that fine print in your policy, that you now have to come up with the $402.19 to replace your 45 to 49 inch LCD LED TV. Okay? So when it comes to certain things, they're just not going to pay that. They're saying you got to pay this. So that's what non-recoverable depreciation is. They're not going to give you a chance to get it back, even if you replace the item back to new. So since they're not going to get it back, since you're not going to get it back, what are they going to do? They're going to take it out of your depreciation. So instead of this number being waiting at the insurance company for you to finish the work and then send in a final bill, now it is this number due to the non-recoverable depreciation. So after they take this away, they are going to send you a check for $688.35 once the work is completed. Okay? That's all you have left at the insurance company. So your net claim, if depreciation is recovered, this is what the total liability is for the insurance company. After they take out your non-recoverable depreciation, after they take out your deductible, that's the maximum amount that they're going to pay based on this, based on these line items. Okay. Now this is going to change. Any contractor worth their salt is going to know how to go over and get money out of the insurance company to get the work completed. I myself took a claim from about $4,500 to $26,000 for a lady here in the Springs, and we got her fully restored. They're generally not that bad. That's a pretty rare situation. You're not going to see that kind of difference, but it's not unusual at all to increase a claim by 20 or 30%. That is totally normal and expected. So if you do see a difference between what the contractor's estimate is and what the insurance company's estimate is, just make sure that you're only responsible for your deductible and everything will work out fine for you. As long as your contractor knows what they're doing and they're people of their word. Okay, I think that's it. If there's any questions or anything that I missed, overlooked, go ahead and put that in the comments. I will be checking, and thank you so much for paying attention to this short video. Have a good night. Bye.